Hello and good evening to my late night live stream. So, I got a question today. Why did the markets crash today? Right? We saw a huge sell off in the Nifty, and a lot of my friends and some of the Investors Club members inquired about what is the reason. Of course, those who are new will be shocked to see such big sell off and such sharp fall in market, especially those who have just come in last in one year. It's very disheartening to see market fall to such large extent in one day. But I don't think it's anything out of the norm. Personally speaking, from my experience, now the market has come to a different maturity level. But the biggest reason why market sold off today is because of a lot of foreign firms, which is known as FIIs, have sold their positions in big stocks because of certain uncertainties that they see. Okay, now it is a big risk for them because they are playing at a different level of the amount of money that they're spending or investing in India, and the kind of returns they're looking for, and the kind of time frame they have. Okay, so as an investor, I would say, first of all, do not get worried. These kind of flash crashes will keep happening in a long term bull market. Okay, we don't have such a big fear as much as the coronavirus fear was there. And last year we had probably one of the biggest threats in the world, last year, sorry, and we have actually overcome that as well. So do not worry, always compare it to the world ending news that you already see, but nothing happens. But the fear in the market is always going to be there. The news channels and all the other entities who are making money from fear mongering are going to be triggering this fear inside investors all the time. Not to mention, sometimes it's our own human habit to be fearful as soon as you see the first sign of negative sentiment. Now, let me just get to a couple of reasons why this is happening. But before that, I again said, do not worry. This is probably the best time for you to pick up on good stocks, all those high quality stocks that you thought were out of your reach. They were expensive. Now you got a discount on companies in India. I would say the highest quality companies in India, and try to capture them in your portfolio. If you already have some stocks which have gone below, but you know the quality of the stock is great, then you add a few more so that your average buying price gets really, really good. Okay, so now a couple of reasons why this short-term turmoil has come into the markets. Because markets major nature is that markets do not like uncertainty, and especially FIIs, those who hold big positions in billions of dollars, do not like uncertainty. So number one, tomorrow there is I think 25th or 26th, there's going to be a meeting in the United States to interest for interest rates to be hiked. Most likely they're going to start increasing the interest rate, because last couple of years they had to bring back the economy, so the interest rates were really low, which boosted the economic growth. Now that the economy is getting back on feet, what is expected is that Federal Reserve Bank, the basically RBI of United States, is going to increase the interest rates. So that ultimately means that anybody who is going to be taking money is going to have to pay higher cost on it. That is going to put pressure on a lot of companies in the US, and that's why investors might be cautious. And that has an impact globally, because everybody, directly or indirectly, is connected to the US economy. And that's why a lot of financial I would say a lot of investors, FIIs, are going to be cautious. So there has been a sell-off in the US economy, a US stock market as well, and same thing has been replicated in Indian stock markets. Okay, now India has got other things to worry about as well. First of all, there is pre-budget jitters, and this is something that I have already mentioned it to a couple of my friends, and probably I'll mention it in detail in the Investors Club meeting as well. The Indian budget this year is not going to be as good as it was last year. Last year was basically a master blaster budget that we had gotten, because we were in such dire circumstances. Now the situation is not as bad, so we are not going to have a master blaster budget. It is going to be most likely a mixed bag. Okay, and whenever there's a mixed bag result, we're not going to see such huge turnaround in stocks. Suddenly a lot of buying will not take place. What is going to happen is market is going to react, I would say, will try to normalize the reaction. So we're going to get a moderate reaction from the market. It could be up, it could be down, that nobody can predict, but the reaction is not going to be as amazing as it was last year. So currently what is happening, people are already expecting the budget to be moderate, and that's why nobody's taking huge positions. They're waiting for the market to the budget to be announced, and then they want to take a position. So in a way, they are preemptively trying to exit from positions to protect themselves from any budget uncertainties. Okay, so because the budget is not going to be that great, market is already taking a nosedive. So this is again a common pattern. People try to preemptively take positions in stocks, whether it's buying or selling before the news hits, and the news kind of automatically gets digested into the markets before it can be released into public. Okay, the budget, obviously some people might have already known about the budget, and that could be a reason why big names are being sold off. And after the budget, there'll be a little more certainty, and the new positions would be, or the fresh positions might be taken. Not to mention the Omicron fear that is already there in the, of course, it's there in India, it's all over the world. The new variant of COVID virus is still there. It's infecting faster. In fact, I was recently tested positive for the new variant in spite of having both the vaccinations. So there is that certainty and fear that is already going on in the markets because of this new variant as well. Nevertheless, as long as human race is surviving, markets will come back to its normal. I mean, as far as the virus is concerned, if the virus wins, then the human race won't exist, and then there will be no point of being in the markets. So but that uncertainty is always there because we might have a lockdown, we might have restrictions on travel, businesses, so many things. So that uncertainty still looms on the market. And as I always say, markets do not like uncertainty. It could be a purely good news or it could be a purely bad news. As long as there's certainty, money will flow into the markets. Okay, so currently that uncertainty is adding to the sell off, or people losing their position. Past few quarters is going to be a little difficult, right? So because of the earnings being expected to be a little muted, input costs like raw material costs, everything is going up, inflation is going up. So companies might not have the same results as they have had in the past few quarters. So that is also another reason a lot of companies are, I would say a lot of FIs and big firms are releasing their stocks because they don't expect the same stellar earnings in the future. Okay, and finally, I think I had made one more point. I guess that is it. So these are the main reasons why big positions are being downloaded. But as far as really long term is concerned, these little factors do not contribute to long term demise of Indian economic growth. I think Indian economy is still on its path, and with bull markets, these kind of flash crashes will keep coming. My investors meeting is happening on 26th morning 11 on the Republic Day itself at 11:30. I will be sharing some of the stocks that I feel are going to be great for to buy in this correction. Okay, so those who want can probably get in touch with me and ask me how to get hold of those list of stocks. Okay, so for now, I hope I have clarified some of the reasons why the current stock market is going into all of this craziness. But rest assured, if you stay in the markets for long, you will see these kind of movements are pretty normal. This is a regular day in the Indian stock market. It's just that now the size of the market and number of players and number of retail traders is more. So the jitters are going to be there. The shocks are felt a little more, than usual. So that is it for today. If you have any questions related to this particular live stream, put it in the comments below. If you're listening on Instagram, make sure you go and subscribe to my YouTube channel where I'll be posting some really good tutorials in the upcoming months. And if you're watching this on YouTube, go and subscribe to my Instagram channel because I give a lot of short but really insightful videos and knowledge bombs on Instagram as well. All right, then stay safe and happy investing. This is the time to jump in and scoop up your favorite stocks. All the best. Happy investing.